So in this video, we're gonna give you our thoughts on how we can assess management. I think this video is also inspired by a book that just came out, Mr. Tong Portfolio 2. Go check it out. It's out. Now, we have a question. And this is something that you guys can think about as well. And I'm going to think about it as well, right? Would you rather buy a company where it has a coal mine with capable management of high integrity, or a gold mine that's not well managed? So when you first saw this question, what was your answer? Too busy to find stock ideas? Check out Fiverr Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
I immediately think about, the one who is operating the business is more important than the business, because even though you have a good business, right, it probably won't destroy the company now or the business now, but in maybe one generation later, I think the business will not be there already without this capable management, or at least if, let's say, the value is not passed down to the next generation. What about you?
Wow, so this is a very interesting question. I think my knee-jerk answer was the top, right? Because I'm seeing this question for the first time as well. So I think it's the coal mine question. But then if you look into the industry, gold is going up. So it doesn't really matter whether you manage it well, it's going to do well. Although in my experience, it's not always true that a gold mine would go up if gold price goes up. But then at the same time, a coal mine, there are two aspects. The first is that with electrification, coal is going to be more in demand, but that might also introduce more supply into the system. So more coal mine production will go up. But that coal mine also has a bad rap for, global warming, environmentalism, and things like that compared to gold. So, but my knee-jerk reaction is the first one.
Yeah. Okay. So yeah, that's a quick little small teaser for you guys. So a few companies that we're going to talk, 5 actually. So number 1 is CCK Consolidated Holdings. I mean, if you can look at the share price, it is like a 15 bagger.
Yeah.
Yeah. 15,000% up. And the funny thing is that for, if you guys didn't know, I actually wrote a report or write up on CCK. So if you're a Fiverr Pro member, you'll be seeing this report very soon. And what I've learned after reading the annual reports, right, is that this management team is a very great capital allocator. Not just like buying things at buying the right things, but also selling things that is not working out for them. So in 2008, they actually ventured into this retail store. So if you guys didn't know, CCK's business is basically, they are initially a poultry business, chicken, all those stuff. And then they did a vertical integration and they go down to retail store. So they also sell their chickens in their retail store. And not only just chicken, there's your vegetables, frozen products, and all those kind of things. Now, what makes them great is that in 2008, they ventured into this Peninsula Malaysia, whereby they opened their retail stores over there. Now, back then, Peninsula Malaysia, there's not many of a retail store. So back then, I'm not sure whether Jaya Grocer is there or Village Grocer. Probably maybe just 1 or 2. But basically, the competition back then was pretty manageable. It's not a lot. But in 2017, they exited the Peninsula Malaysia. And why they exited is because there's a continuous years of loss making for their retail stores. And then, but at the same time, their East Malaysian retail stores are doing very well. So they actually decided to pivot, and they say, the Peninsula is not working well. I think they cannot compete. So they know how to bite their teeth and then just
exit
everything. Yeah. So that's what I thought it was a great capital allocator. And this is just one part of the story only. There's actually multiple acquisition that they did that actually managed to improve their business in terms of return on invested capital, profits, cash flow, everything. And the second point is basically their loyal management team. So this management team has been with the CEO, which is Tan Sri Tiong, or the Tiong family, for more than 30 years actually. And in the rumor has it, I'm not sure whether is it rumors or whether there's an analyst who met him personally, but their impression of Tan Sri Tiong is that he's a very kind and generous person.
Okay.
Yeah, and there's also a reason why the management team has been with him for 30 years. So I think the numbers already speaks for itself that, when you have a good CEO, you have a good operator, right? I think you tend to want to stick with him until the end. of the life of this business. So yeah, that explains the loyal management team. And the last one I just pointed out is a kind and generous founder. I think this was also pointed out in the Once Upon a Time by Ng Su Han's book.
Yes.
Yeah. So he did talk a little bit about
Trade.
CCK. Yeah, so that is basically my takeaway for CCK. Yeah, just want to show a little bit also on the returns on investor capital. Although it's like a little bit like, see, there's a roller coaster. Here it's doing well, but here not so well is because of the Peninsula retail stores not doing well. But once they cut over here, this is pandemic, and things start to just like turn around back again, back to where it used to be. Okay, the second one, 99 Speed one. This one I think you and I have
we
talking about it.
did a video on this so you can see fully, but we just want to highlight how management can really boost. Because okay, first and foremost, I think you guys will know, you probably in half asleep you can mention 6-7 different marts, right? I mean, like KK, Hero Mart, Zero Save Mart. There's a few more, right? Pop Boy, I don't know all this. And when it comes to that kind of business, you need the right people to be the differentiator. But because it's not like the advantages that Speedmart has is not what other people had at the beginning. But everybody started small.
Yep.
Now they have a big advantage because of the size.
Yeah.
But before that, they didn't, right? Like, people talk about moats and all that, and that's what sustains the company. But people seldom discuss on why those moats exist in the first place. And usually, the people building the companies was building it when there was no moat.
Yeah. So when we were actually studying about 99 Speedmart, we saw some resemblance on this CEO. We call it that he's like a mirror of Soul Price, Sam Walton, and also Jim Sinegal.
Yeah.
Of Costco, Walmart, and and also I can't remember what's the last store.
Yeah,
but
anyways, Walmart and Costco, right? So
yes. So yeah, they are it's a very hands-on CEO. So there was an interview with The Edge where actually the CEO also go through the QC in terms of what product can be sold in 99 Speedmart. So he is always thinking that he doesn't really care about the brand. He just care about whether this item can move fast or not. So when he was like, when there's a lot of suppliers are talking to him and wanting to like have a placement in their 99 Speedmart, basically he just will skim through and then he will say that I think this item cannot sell, so sorry, we'll pass. And then I think this item can sell fast, okay, so this one go in. So he's still like very involved in the business. And not only that, he also did mention that, when customers feel very hot near the refrigerator. So yeah, then he said that, what, I think we need to install a heat waste feature so that the customer won't feel hot when they are nearby the refrigerator. So yeah, I think just these two alone.
Things,
little
it's important because if you've been to 99 Speedmart, you know that it's quite congested. So it's the space between the rack and the when the fridge is like
it's actually
maybe 1 meter, or
that's why there's a heat, and then they feel like I need to change, and then they did change everything straight away, and that's why you can see that they are very customer centric, kind of like business operation. And the last point is they are focusing more on the business than shareholders, because I think recently there's an article that say that why 99 Speedmart's free float rate is so low. It's like I think 15% or less than that. It's actually lower than the guideline that the Bursa listing wants them. 15% free float rate, very, very thin. I think the standard benchmark is around 20 to 25%, if I'm not mistaken. But the CEO just said that, they are just caring more on the business rather than the share price of the company. And he also did mention that even though if 99 Speedmart hit 20 billion in revenue, which is going to be like 2 times what they are making right now, he's still not going to sell a single share. So he has a very long-term minded in terms of his own business. And he also did mention that he don't have a second chance when he start 99 Speedmart. So basically he went all in this business. So that's also another key interesting trait on this CEO, which is Mr. Lee Tianhua. And I can see that their ROIC perfect. This is ridiculous and very good. Okay, the third one, Masterpack. Masterpack is a company that we have actually written a write-up on it. I think it was in September 2022. MJ introduced to me this idea when he was screening through your list, right?
No. I was just going around talking to investors, and then someone just mentioned Masterpack. Then he just gave me, hey, they're linked to solar. I was like, oh, okay, the right industry, so to speak.
Yeah,
So then I looked at the numbers and I said, hey, it's like really cheap, right? I think it was less than 7 times earnings back then.
Oh yes. Exactly.
Then they paid a dividend and they're in the right industry. So I was like, oh, okay. Then they was like, hey, Jonathan, just take a look.
Yeah.
And then it made your 2023, right?
Yeah. Not only Masterpack, but also MSM.
Yeah, of course. But
yeah,
this was the big one.
True.
This is the big one, right? So
yeah. So great capital allocator. I think MG also have this insight with your some of these industry experts that they say that Masterpack is someone who don't spend capex simply. When they know that there's order, then only they spend
yes,
the
and
capex.
and also they have the unique advantage of being linked to solar. So they do wood pallets, right? These wood pallets are meant to sort of like, you can say, store the solar panels or whatever equipments. And the thing about solar equipments compared to, let's say, semiconductor equipments or other type of equipments is they are relatively simple, right? It's a square. Which means that when they manufacture the wood pallets, it's copy and paste. So it's simple. The demand is somewhat predictable with the links to First Solar. And the job is a lot easier.
Yeah.
Now, other companies can have the same advantage, but where the management came in was, maybe you can share a bit about how they manage and allocate the capital.
Yeah. So this is a company that if you look at their capex trend, which I didn't put over here, but if you can just like plot like an Excel sheet and you see their cash flow, right? You notice that when they spend more capex, the next year's revenue or profit will be better. That's also because of they know that the order is confirmed by the customers, and hence that's why there's more cash flow. And not only that, first, Masterpack is actually in an industry that is quite unique, not because of the corrugated packaging industry per se, but it's more on the customer that they handle, which is First Solar.
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
So back then in 2022, right, there's, I think, no listed company that actually serve a solar company. You can look at PPHB, Buddha, you can look at Orna Paper, all those kind of companies, right? They're all serving those very saturated industry. So your F&B, your furniture, still got your E&E sector. So these three industries are what I see from all these corrugated packaging. But for Masterpack, it's quite different. It's like 40 to 50% is coming from solar.
Yeah.
So that's what makes this company very unique. And also the valuation back then was the cheap. It's like nobody even care about this company until like LMP Global came and list in Malaysia, right? That's where we know that competitors are
this is around here, right?
Yeah, that's correct. So it's around here. It's already around here. Yeah.
Oh, okay.
Where the competitors come in. So that's where LMP come in, and then DS Sigma also is another company that say they want to venture into solar. So thankfully we exited early already before the dump. But then this is another management that is very good, very conservative and quiet, because I think Datuk Syed, he is a type of person who wouldn't want to have any analyst briefing. He won't talk to you one. Not sure is it because of the scar that they experienced in the past, because I believe it was in 2015 or I think it was 10 years ago, they were into this MACC trouble.
Yeah.
So somebody said that, there's like insider information going on. So I think that's why Datuk Syed decided to, I am going to stay off the media and just deliver in terms of numbers, just show you the numbers. You can see the numbers in annual report. And they did deliver without fail. So this is another company that we like in terms of their management trade. And you can look at their ROIC also has been very, very good recently. Of course, there was a slight little dump over here because of probably the solar trend wasn't really picking up back then. But in 2020, 2021, that was where things start to turn around for solar. So there's more demand for their services. The next one.
This is a big one.
Yes.
This is one of my biggest failures.
Please share.
Pre-split, I I had the opportunity to buy it at 70 cents.
Around here, right?
No. Pre-split. Meaning it's probably at 35.
Wow.
I can't remember the exact split already, but let's call it a
When was the
1-to-1.
year that you discovered it?
early 2019, I think. So
So
here
it's,
lah.
so
Correct
here,
lah, about
yeah.
50 cents, right?
Yeah.
They're about 50, 30,
Yeah, 30,
yeah,
50,
call it,
yeah.
yeah, let's call it 50 cents. Yeah, that's it. That's
Yeah.
You just try bought it and didn't buy it, didn't
Yeah.
listen to Mr. Oi. I met the management, that's the worst part. I actually met them, Mr. Nicholas. I was impressed, right? I spent 4 hours talking to him. He gave me education on the business. He said it's a very simple business, more chips for me to wash. I earn more money, more complex the chips. I earn more money, and I work with a certain Taiwanese company to really
So I think
ride on their growth.
So I think 2018 is where they actually created a new S curve. So S curve is actually coined by also Mr. Tiong. Basically, they venture into an industry which is growing at a rapid pace. I think Frontend used to serve like an oil and gas company also.
Mainly. So
Mainly
it was like 80-20 and then they flipped it around.
Yeah. So that
I'm
was
oversimplifying, but that's basically what it is. Oil and gas, of course, is up and down business. I think the margin is not as good. Whereas semiconductor is up and down, but it's up and down, up.
Yeah.
So it's like a cyclical up kind of industry.
Yeah, so that was the turnaround for Frontend actually. And you can see that since then, 6x after.
Yeah, and also they are a service business, right? So they like building semiconductor, they think a lot of capex, a lot of spending, fixed assets, whatever. They do have, obviously, they need equipment to wash it, but it's mainly a service thing. So they will be less volatile and less sensitive to cyclicality, and that is one advantage. But of course, the disadvantage is that once they work with this Taiwanese company, it means they cannot work with others, or it's harder. And the second thing is that service businesses don't necessarily scale as fast as product businesses. Their customers are products, they produce chips, so that you can really scale. But when you're a service, there's only so much space and so many people you can clean at one go.
And interestingly, also that is where who's it, Mr. Oi Keng Ti? Who's also inside. Yeah, correct. And one final point is that they are more of a business person than shareholder.
Yeah,
and
that's correct. That's correct.
Yeah, why I say that is because when during analyst briefing, he always give very sarcastic remarks.
Yeah, I mean, pokes fun of them. In fact, I can share this. When I first met him, I was an analyst. So I came there, I shook his hand. Mind you, that time I had a ponytail. Okay.
Okay.
So then I asked him, hey, nice to meet you, blah, blah, blah. The first thing he said to me, I don't like analysts. I said, why? Because they don't know what they're talking about. What do you know about semiconductor? So, but then you might be asking, well, if that was the approach at the beginning, how did the conversation last 4 hours? The answer is, I just told him, actually, I don't know anything. That's why I'm here. Then he just gave me a free
lecture
education on Frontend and how he thinks. He just wakes up every morning and makes sure that to look at his production and anything new coming in. It's a very very automated kind of business. So it's doesn't require like super creative. Of course, Mr. Nicholas is ridiculously up there in terms. I mean, he's a lawyer, right?
Yeah.
So, but it doesn't require a lot of like super innovation to really boost company. Just looking at it and say, why are we doing oil and gas? Let's flip to semiconductors. Let's maintain a relationship with this Taiwanese company. Don't mess up. That's it. Spend money when you need to. Don't spend when you don't need to.
Yeah, and he's a very humorous CEO also.
Yes.
A lot of humor. Yeah, and you can see that the pivot in 2018, that's where their ROIC also start to explode. That's the new X curve for Frontend. Now, the last one we have here is Harta Lega. Actually, at the point that we share, in terms of this share price, is actually below that what was recorded today. I think because of there's like a certain
today, I think it's as of this recording is $3 probably.
Yeah, 3 ringgit and 17 cents also. Yeah, it's a massive increase. And yeah, so Harta Lega is also known for their focus on customer more than profit. You can tell that in 2020 during the COVID height, you can see companies like Top Glove or even Supermax, they increase their average selling prices like mad. It's a very steep increase.
Yeah, but they didn't.
Yeah. So yeah, Harta Lega didn't because they think that it's not ethical to take advantage of during tough times, and especially it's during COVID times where there's such a high demand. So they try to keep the average selling price as not as high as possible. And that is how they manage to retain their customers until today, which is very impressive. It takes very huge, I would say like
Self-control.
Yeah, self-control, humility as well, for them to do that. And not only that, they also created a few millionaire employees who stay with them since the start, because of the ESOS. And also back then, if the employees decided to sell their ESOS share in 2020, they'd already be a multi-millionaire already. So yeah, this is a company that they have been sticking around with this, this CEO, this management team, and they love them a lot. The Kwan family is known to be very generous also.
Yeah, the CEO wakes up every morning, first thing he checks is his factory,
yeah.
the production levels.
Yeah.
What's the name of the factory again? There's this special.
Is it NPC? It starts with N1, if I'm not mistaken.
Yeah.
Yeah.
Anyways.
Yeah. So yeah, but just now you mentioned, yeah, the CEO is very business driven. Always thinking about factories and how to improve efficiency and whatnot. Even until today also, because I believe there was an analyst briefing that say China comes in, is going to come and take your market share. How are you going to prevent it? And they give they also admit that China is a very big player. But then they got to say that that's why they start to decommission some of these old factories and rebuild the new ones so that it'll be more cost efficient. And also they did highlight that their quality, their nitrile quality is still very good. And they also did highlight a little bit on Chinese glove, what are their risks also. So in the end, I think they are very data driven. They just give the facts rather than their opinion. So I think this is also another CEO or management team that is worth studying or worth following for. So yeah, those are the 5 companies that we have shared, and this is the ROIC for Harta Lega. Yeah, this one was the super normal
So even
times.
they also overinvested.
Yes, correct. They did.
But probably less than the rest.
Yeah.
I think them and Kosan are the two that really the best discipline, but still.
Yeah. So this actually show you that business sometimes also trump good management team also because of cycles and whatnot. But yeah, so these are the 5, and the takeaway here is great businesses are rare, but great managers are rarer. So yeah, if you manage to discover a great management team, make sure to follow them until the end if you can. Best if you can find whether they are in the right industry. And the second point we have here is Henry Singleton and Mark Leonard, because these are 2 of the greatest of capital allocator and also operator. Mark Leonard is the Constellation software. If you look at the business in terms of share price, it's already like a multi-bagger. And he's also known to not show any presence in the media. He doesn't like to have interviews and whatnot. He's a very secretive guy and always just working only.
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
Henry Singleton, it is Warren Buffett and Charlie Munger. He admire him a lot because he's just like a... Can you say that he's an activist investor, or is he like he always acquire companies at the right price?
Yeah.
And also keep them and retain the management actually. And in the end of his business, which is Teledon, when he think that he no longer have the ability to run a business, he actually asked Buffett to take Teledon in exchange for Berkshire Hathaway share.
Wow.
So, yeah. So that's why Buffett said that at the end of his career, Henry Singleton is still the best allocator of the entire history of investment.
Wow.
Yeah. So actually that if you want to know more, you can just Google or YouTube on Henry Singleton and Mark Leonard's background. And the third one here is the best tool to actually analyze management team is annual reports. Now, we're not talking about just 1 year of annual report. We're talking about since the start. Best if you can add prospectus into it. So that actually is how I managed to understand CCK's management team and how I
Yeah.
actually know about their capital allocator. So you need to read every single thing that
It's
is
like history,
available.
right? Like you want to know what they promise, whether they accomplish it,
Yeah.
what changes they make, did it work or didn't it? All the time you hear, like you might be seeing the management this year saying, "Hey, we're gonna do this thing, right? Gonna do this new venture," and then he gives this very good sales pitch, and it's very, very convincing. But then, if you really read through the annual reports and the prospectus, you may come across him proposing maybe 7 years ago a very similar story on a new venture that didn't work out, and maybe happened 2 times, 3 times. So what this does is that it helps you to be aware of this and also to be very cautious about this particular management because they've overpromised before. But the only way you can know that they overpromised is that you actually read the reports. And as they say, tigers don't change, or leopards don't change their spots, or tigers don't change their stripes, whatever the quote is. That said, sometimes people can change, but the burden of proof is very high. If they're going to change after years of failure, the question is you have to be really, really convinced.
Yeah, and it takes like 5 years to build a reputation and just 5 minutes to
Yeah,
destroy
pretty
it.
much.
So yeah, it's best to maintain integrity. The fourth point here is how they manage downturn. This is very key, and this is where we can see from Harta when they face a downturn. So they have always been like talking to analysts, talking to customers, and trying to like educate everyone that their business is on they did admit that their business is on a downturn, and they basically just say, this is what's happening and this is what we are doing to solve it or to minimize the impact. And I find it's very great. It's very noble for them to do that. That they are very honest and also genuine in terms of like giving feedback to everyone. So yeah, that's also for, because I think downturn also is where the times where management teams start to show their true colors, right? Yeah.
Because when times are good, everyone's making money.
Yeah, when times are bad, you don't want to be like the CEO of CEB, because like CEB, we have like analysts who tried to reach out to them to just talk about their business, but then they rejected because of something. Yeah, but yeah, so that's all we're gonna share. And the last one is ROIC. These are a very simple metric, whether they can always make more returns based on the amount of capital that they've invested into the business. So those are the 5 takeaways, and hopefully you can know how to analyze or assess management better from our video. And before you guys go, this is FirePro's return. So far, FirePro is making about 40.53%, Catalyst 13%, and Boring 4.63%. Now, if you want to know how we analyze company, how we analyze management, and how do we even read so much of annual reports, or how do we dissect and decipher the message behind the chairman's statements, the management discussion and analysis, and all those stuff, then you want to check out how we do our write-ups. I mean, from there, I think you can learn a lot.
You can figure out yourself. You can read it yourself, or you can let us help it read for you with our write-ups, with our Telegram group chats, and also our management notes, right? Where, a lot of you guys don't have access to management directly. We fortunately do, and we don't think it should be just for us. So we like to pass on a lot of this information to you guys as well.
Yeah, and if you want to get a taste of FirePro, you want to check out how we write our write-ups, you can see our free sample. The links will be in the description and comments below. So that's about it for today's video. See you next week.